there are 100 reasons why people want to sell a business. They could be getting married. They could be getting a divorce. They could be having children. They want to buy a house.
They got another project.
They've got another project they want to work on. They realize that they're sitting on a pile of cash, and founders still get anxiety about their business going away. And sometimes it's just like, let's take this pile of cash from here and put it over here, and your risk goes away. And it's a life-changing payday for anybody.
Ignition sequence start. 3, 2, 1.
Kevin,
hey,
thanks for being on, man.
No problem.
Appreciate it. SureSwift Capital. You are the man who's bought in 34 companies in the last 4 years.
I'm one of the men. I don't know if there's others, but 34 companies in 4 years.
That's crazy. All B2B SaaS?
Not all. Part? We have a few content sites.
Yeah.
Just because when we first started rolling them up, they're so easy to manage. Doesn't take a lot of effort. So we do have some still in the portfolio that are pure content.
How do you manage? I mean, most founders have a hard time managing themselves and their one business. Yeah. How do you do 34?
Well, I don't. I've got an amazing team of people that look after the day-to-day operations of each business. And so really I am just running one company, and that's SureSwift.
Yeah.
Right. So, but it wasn't a linear path to get there. Like lots of stumbles along the way of like hiring too slow and then hiring too fast. And I wouldn't say we've got it perfect, but we've got a really solid team, and we've got a better process for making decisions about, hiring and firing and those sorts of things.
So in regards to capital to even buy these companies, the bazillion dollars, like how do you do that?
Started with just myself and one co-founder, pooled our own capital and started buying. And I like to say we bought small so we could make smaller mistakes.
Yeah.
And as we sort of spent through that, we brought on 3 other partners, and everybody but me put in materially more capital.
Yeah.
And my contribution was just saying, this is what I'm going to do for the foreseeable future. So we're now each own 20% of the business. As we continued to make acquisitions and we've got a stable portfolio, healthy P&L, healthy balance sheet, then banks were okay with lending us a little bit of money to extend that runway. And so that's how we've capitalized it. All just a small group of like-minded people.
So what level does a banker, what's the ratio? Is it a history in business? Like you've been around doing this, so you've got a track record, or is it the acquiring entity has to look a certain way so you can get some funding on it? Like mezzanine
our deal, the way we worked it out is it's a war chest for acquisitions. Mm-hmm. And we said, this is the type of business that we are going to acquire, but there's not a decision point. As long as we're within those guardrails that we set for ourselves, we can go make the acquisition. The banks don't have to approve or.
So they give you the covenants.
Yeah.
They look a certain way, keep the ratios in check.
And so in terms of like time, and we had been in business for less than a year, I think, when all this started happening.
That's pretty impressive. They were willing to.
Well, but we're buying profitable companies, right?
Yeah.
So like there's clear assets there. The challenge we had was that this is
Did
traditional.
They even know what SaaS was?
No. I mean, yes, but they needed to have it explained to them.
Yeah.
Unlike now, Stripe is giving certain businesses loans.
Yeah.
You don't have to tell them anything.
No,
they just look at the data and they know exactly how much to give you and when to give it to you and what the terms should be. So banks are like,
if we don't get on this, other people are going to start.
Banks are really, really old traditional businesses, and I don't see them moving fast in this direction. And there's a couple big ones like Silicon Valley Bank and Square One or something in Chicago that does this. But the ones that I found are very traditional.
Yeah.
Good partners, but we had to kind of drag them along to understanding what we're doing.
What does a traditional business, like a deal that you would do high level, what does it look like? What are their revenues? How do you evaluate them? How do you give them a multiple?
So prototypical business would be founder, developer.
Yep.
And it's not a hard and fast rule, but we've only bought bootstrapped businesses, partly because of the multiple expectations. If somebody's even taken a little bit of angel money, all of a sudden you've got another person with a vote, which is a problem. And we've had deals blocked by minority investors when me and the founder had aligned on terms. And so typically a bootstrapper who's a developer themselves, they grow to a certain scale, they can afford to hire a team. So they might hire a junior developer or a customer happiness person. We use the term customer happiness versus customer satisfaction or customer success, just because it's a higher bar.
Yeah.
They might have a marketing person. So typical business is a founder and 3 to 5 contractors when they decide to sell.
And the revenues would be?
What's right in our wheelhouse is revenues from $25K MRR up to $100K MRR.
It's kind of like $1 million in ARR kind of thing.
Yeah.
$1 million reoccurring business.
Yep. And actually it could go higher than 100K. Like we've made offers on businesses bigger than that. They just haven't come through yet. And so market multiples, this isn't Kevin's opinion, the market multiples are around 4 times trailing 12 profits.
Yeah. And that's SDE, like seller discretionary earnings.
Yep.
Yeah. And that means their salary and profitability essentially minus like one-time big expenses they can.
That's right. Yeah. Anything that they've been taking out of the business for themselves gets added back in, and we're just looking at the ongoing expenses.
So the founders decided, you guys connect, and we'll talk about that, but like they're ready to sell. They agree, let's call it 4X. Let's say they're at, probably 40%. I'm assuming like 40% around that. Yeah.
We've had some that were as high as, you talking margins?
Yeah.
Yeah. We've had some as high as 70% margins.
Damn.
Yeah.
And they still want to sell.
Yeah. People, it's
fascinating, right? Because they could not sell and just keep it as an asset, because that's what you're going to do.
Yep. And people sell businesses. I learned this. I didn't know going into it. I thought it was just all about the money and maximizing price. That's not it at all. There are 100 reasons why people want to sell a business. They could be getting married. They could be getting a divorce. They could be having children. They want to buy a house.
They got another project.
Often they've got another project they want to work on. They realize that they're sitting on a pile of cash, and founders still get anxiety about their business going away. And sometimes it's just like, let's take this pile of cash from here and put it over here, and your risk goes away. And it's a life-changing payday for anybody, right? So, yes, some people think, well, why not keep the business? And well, okay, keep the business, right? But it's not. I don't like it when people think of founders who sell an asset like that as being foolish, because it's not. It depends on their personal circumstances, and they're getting a really nice return on the investment that they've done. Another really common reason is that somebody's been working on something for 5, 6, 7 years, and if they were that prototypical founder-developer, I want to start my own business so I can quit my day job and stop working for the man, then all of a sudden they've got this team of 5 contractors, and they are the man instead of working for the man. And a lot of developers are just like,
I don't want to
be the man. It's not what I want to do.
Yeah.
Right. And so that is also not about money. It's about personal happiness. They decide, I will be happier. Money helps with the happiness, but I will be happier doing something different. And then you've got control of your life back. And not everybody's able to organize a business and run a business while still controlling their life.
So you buy. So let's say the number, to keep it simple, 50%. Trailing 12. Mm-hmm. So you get $1 million business. You pay them $2 million, because you're going to give them essentially 4x on that 500. So it's $2 million. Mm-hmm. And then so you've got your capital, investors' capital. You put that. You buy the asset, and then this thing is kicking off, 40-some thousand a month, and like that's how this thing ends up. Like, when you buy the asset, the company, is there like a playbook that you execute to kind of extract more value or increase the value? Like, first I want to ask you the question, what do the terms typically look like for a seller? If somebody's watching this and they're like, hey, Kevin seems like a good dude, but I'm, the numbers sound good, but like, what is he going to expect me to do?
Yeah.
What's normal for, the entrepreneur selling? What should they expect?
What we typically ask, if somebody's, the smartest founders have figured out a way to extract themselves from the day-to-day operations of the business already, and that's the spot we would love for it to be in. So the degree to which somebody has done that somewhat changes the terms.
So that actually is a positive for you.
100% a positive. If you're
still writing the code.
If you're still writing the code and answering support tickets, that is not a deal breaker. It just changes the economics for us.
Yeah.
And there's more things that we have to replace, more functions that the founder's doing that we have to replace. So kind of down the middle deal terms that we offer people a lot is, we want you to help with the transition for 6 months. Mm-hmm. For months 1, 2, and 3, you keep doing exactly what you have been doing every day.
Let us watch.
And we're going to watch over your shoulder, and we're going to start executing our playbook. And then months 4, 5, and 6, you should expect that we have replaced all of the day-to-day functions with either a person or a process from SureSwift. And we start with like the headaches that every founder knows that are HR, finance, accounting, keeping the lights on with the tech. All those get pulled into the SureSwift machine. Yeah. So the role of the founder gets smaller right away. And then we generally have a good idea before we even close what the plan is for the people, but those first 3 months give us time to hire the right person for that business, or take somebody from the existing team and put them in charge of that business. And so we've got a playbook and a process for just about everything. And it starts actually from when either somebody reaches out to me saying, I'm interested in selling my business, or I might reach out to them and say, I love your business. If you're ever interested in selling, please call me. And then there's a process and a checklist that takes us up through close day and then the 180 days after that. And it's all from the learnings of 34 acquisitions, and some going really well and some not going well.
Or what?
Yeah. Yep.
So
always
how does
escrow.
That all look like?
Well, some of this stuff, it's deal by deal in terms of like how much money is released at what time. So I probably shouldn't talk about that.
Okay.
Well, if somebody agrees to a 6-month transition, there's almost always some sort of a holdback of money for that end of 6 months, just to make sure they live up to their end of the bargain.
But is there like 80% upfront?
Depends on the deal and depends on how complex that transition period is going to be. Could be that there's an earn-out. If a founder makes a case like, hey, I could sell it to you now, but it's going to be worth more in 6 months.
You say, well, if you hit those numbers,
let's do that together, and you'll make more money. But
so you can get the deal done today and still get, and they can still get the deal done today and participate in that upside.
That's right.
And it's a good way to just like squash that, rebuttal. They're like, well, it could be worth more in a year. Yeah, well, that's a year that you'll be running it. So
the rebuttal is usually like raise your selling price because I know it's going to do well in the next 6 months. So that's a false argument. Like, this is what it's very worth today.
Yeah.
If you want to hang out and help meet those goals
the whole
and
point is
extract more value, then that's fine.
Yeah.
Yeah.
And how do you find these deals?
Well, there's a group of brokers out there in the world helping to facilitate transactions, some good, some not so good.
Yeah.
So that's one channel. The other two channels I kind of reference.
And I know that they like, and we've had a few, we had, Thomas from FE International. I know that some, they like people they know are going to buy. Like you're a buyer, they know you've got the cash.
They call it execution certainty.
That's it.
So if Thomas would say, if you put Kevin up beside a buyer that they don't know, Kevin's the safer choice. And that's, I don't abuse this privilege, but even if I'm offering slightly less,
they still said they'll recommend it because they're like,
every broker,
there's always a deal that's going to happen.
Yep, and that's part of their
value add.
Part of their value in the transaction is coaching a seller, because usually it's the one time they've ever gone through this in their life. And it's really stressful, really hard.
Emotional.
Very emotional. They got to get it right. And part of the broker value can be coach them through that, help them understand when a process is working as designed, what's normal, what is not normal, what risks to look at. Because, for example, if somebody offers 20% more than me for a sale of the same business, the seller might be more interested in that 20%, and that's fine.
Yeah.
But the broker's going to, and we would coach them too. Of like, there are other factors besides the price that are important. The terms. What are we going to do with the business after the fact?
Are you going to be proud of the legacy?
People use analogies like sending a kid off to college, or giving up a child for adoption, or what is because these founders are tied to their business forever.
Identity.
Right, or good or bad. Yeah, it's part of their identity. So we think about that a lot, and we put a lot of importance on that, and we try to kind of make the founders part of our squad over time, long after their 6 month or whatever month transition period is gone, because we know that they care.
Referral, word of mouth, the other people like, hey, I heard you sold your company to Kevin, did they do right by you? So it's like you're playing the long game.
Yeah, but it's also just the right thing to do.
Right thing to do.
You know, like we like doing business with people that we like and that we trust, and that fondness doesn't go away after they're done. Like there's a guy that sold me 2 businesses. He's still in our Slack channel helping out with like, hey, I saw this in the market, or I just heard about this feature that you guys should think about. Like we're friends.
Yeah.
And yes, he also refers people to me, but we're not friends just so he would refer somebody to me. Does that make sense?
Yeah. You wanted to be friends with him regardless if it...
I will be friends with him if SureSwift goes up in smoke, or, you know, I quit someday, which I don't have plans on doing. No. But he and I are friends because it was just it's a great relationship. And that's true of a lot of people that have sold us businesses.
And when you sell the companies, do you always disclose to the customer base of that portfolio, that company, that it's been changed management or been acquired, or does it?
Yeah, well, there's varying degrees of how we do that. So at a minimum, you got to change the details on the website. So if they want to investigate who owns this thing, you know, we're being honest. Yeah. What we like to do is tell people after some time has passed, because I think announcing something the day it closes, we did that in one case, but there was reasons behind it that were more about a local market, which is usually not the case for what we do. Announcing something on a day and saying, these are the good things that you can expect from us is one approach, and that's fine. The approach we prefer to take is announce maybe 4 or 5 months into the transaction.
So that you can be like, hey, we bought this 4 or 5 months. You haven't noticed any difference because
we bought it 4 months ago, and now you've got 2 people on the support desk when you're used to dealing with one. We've hired this person. We're injecting more into development. Look at these features we've released. So it's more of the story is...
Proof's in the pudding.
We're in a better place, and you know, let us know if you have questions, that type of thing.
Got it. And in regards to kind of due diligence, and like, what do you like? Somebody says they want a company, or they've got a company for sale, and you're like, hey, I'm interested in the numbers. You get the prospectus, whatever. Mm-hmm. Like, what do you look for? What's the Kevin kind of like? What am I looking at?
Well, there's some easy filters that then get down to hard. Like we're pretty clear on a website what we like to buy: bootstrapped, B2B, SaaS.
Is there any companies that you can disclose that you've bought?
Sure. Well, the guy that I told you about, his name that sold me 2, his name is Moritz Dausinger. Yeah. He's a German-born developer living in Paris with his family. Yeah. He sold us a business called Mail Parser. Okay. Which takes data from email and extracts the relevant stuff and puts it into a CRM or a Google Sheet or any one of 100 integrations that we have. Yeah. Built a great product, built it the right way, solid team, code is amazing. And he knew he was sitting on a really valuable asset, and so he decided to sell it. And even though he knew he could just hold it for a period of time, but at the same time he had built sort of a sister company that he was smart enough to have a separate LLC for. That may not be the right term because it was a French business, but separate legal entity called Doc Parser, doing much the same thing, but with documents. And so when I saw it, I'm like, this business is amazing. It looks like the other one's going to be amazing. Can you please sell me both? And he's like, no, because Doc Parser is going to be worth more than Mail Parser is. And he was right. So we bought the first business, Mail Parser, did the transition. He's an amazing person, an amazing founder. So it was like our best acquisition to date. The business kept trending up. He did all the right things in transition. We put somebody else in charge of running it. We remained friends. And he and I would just catch up every once in a while on the phone, or I'd see him at a conference or something like that. I was, how's Doc Parser doing? It's fine. And he was like, it's struggling with this. I could do better, but, and I really enjoyed working with your team. And so at one point, he and I both knew where it would probably end up, but he was waiting to maximize value. So we structured a deal that let him take the chips off the table. We got the deal directly. He didn't make it a competitive process. Yeah. But because we both knew it would be worth more in 12 months, 18 months, we set an earn-out. And so he was right. He got way more money for Doc Parser than Mail Parser.
That's awesome.
Yeah.
What's it like having so many companies that like do you I guess because you have a team that helps operate and monitor kind of the KPIs, like do you ever worry around gateway processing or your servers go down? I guess it's all distributed. It's all
Yeah,
everyone's its own little thing, so it's not like you're gonna have one major system that's gonna bring down your revenue stream.
I worry about those things like any business owner would. I'm fortunate that I have the broad portfolio. So if some business has a really bad day or a really bad month, it doesn't kill the portfolio. So that helps me sleep at night. Yeah. But stuff happens, like we acquired a business, and later my technology team found that somebody was like mining Bitcoin inside our app or something crazy like that. We had a couple of businesses that are independent of one another, like go down completely for a matter of hours, just a few weeks ago.
It's random.
And, I called Jim, my VP of technology, or he alerted me. He's like, hey, listen, something bad's happening. I'm working on it, just FYI. Yeah. I'm like, what happened? He's like, Amazon Web Services went down for this one region. I'm like, that's not supposed to happen.
Yeah,
like,
it's Amazon.
It's Amazon, but it happened. Like, I'm not a technical guy, but like big pharma servers went down.
Yeah.
So I have learned that my personality is one that I try not to get too high on things that are going well. And I try really hard not to freak out about things that are going poorly, and just focus on like, do the right thing every day, hire smart people, stay out of their way, that sort of thing.
Does it still kind of blow your mind how predictable some of these SaaS companies are? Like, because I've always been an active entrepreneur. Like I'm pushing the boulder up the mountain, and I just assume that if I stopped, it would roll all the way back down. And I remember just recently I sold my company Clarity as a marketplace. A marketplace, if you can get the flywheel going, it's pretty cool.
It goes, yeah.
And but I never stopped pushing on it. But then it's been 4 years, and then I was talking to Will, and I was like, "How's it doing?" He's, "Dude, it still keeps growing and doing its thing." And I was just like, "But you guys haven't done anything." He goes, "It's good."
Yeah. Well, I don't think I think.
And then it goes back to like,
active.
shit, I should have kept it.
Yeah, there's a couple things that I think. Robert Smith, you know who he is? He's the CEO of Vista Equity Partners.
Oh, Robert. Yeah, we both have a man crush on Robert Smith.
Yeah, we've talked about this.
Yeah.
No, I have a professional man crush on him. He's just an amazing business person running a business that looks a lot like mine times, a
50
million.
billion assets under management.
So there's stuff to be learned from him, and he has a famous quote. He says, "Software tastes like chicken." I don't care if it's marketing tech or business automation or what a marketplace. Like marketplace may be a little different, but you do the right things. Keep the code current. Release new features. Incent the right behavior. Keep customers happy, and good things will happen. So we're active. And the other thing I remembered as you were saying that was I saw Sahil from Gumroad give a presentation at a conference. And he was talking about this. He's got an amazing blog post about like the roller coaster of Gumroad and like how, exciting and tragic, and now he's in a good place or whatever. And he was showing this chart of his MRR going. And at one point, he just sort of like walked away. He had a team of like 20 people, and then everything went really badly, and he had to fire everybody, and it was just him. And there were times where he was just like bummed out about the whole thing, so he wasn't doing anything. And the MRR chart just keeps going. And he showed it. He's like, guess when those time periods were? You can't, because the business did what it was going to do. And that was part of his point. Like, you can only push the boulder up so fast, I guess. Or, like his point was like the market determines the size of your business, not your effort. So that's another, thing that I tell myself is like, we got to have a plan the work the plan, right? And do the right things always. Try not to let things fall through the cracks, which is a big thing for me in the portfolio. Like you can't forget about any of the businesses. Yeah. So we have systems in place to do that. Yeah. And I trust our people, and I trust our process, and I trust that if we do those right things, and yes, we'll make mistakes, but then learn from that and don't make the same mistake twice, then generally good things should happen.
And how do you prioritization framework for like all these companies? Do you allocate budgets for GMs to invest in those businesses? Like, how do you think of it? Because most people have a hard time doing it for their own product, let alone that many products. And so there's obviously opportunity in the market. Certain markets have more opportunity. Like, how do you decide how to, invest in improving those assets versus saying, I think this one's maxed out. Let us spend more time over here?
Yeah, well, we measure everything as much as we can. We have general sort of guidelines about like X% should be on
benchmarks.
Yeah, like customer happiness, and Y% on development. We try to learn everything from the founders who have sold us the business because they're the smartest ones. And they usually have really good ideas about like, if it were me and profits weren't as important, which they know it's not for us, growth is important.
Yeah.
I would do X, Y, and Z. And so we generally listen to that, take that feedback. We also listen to the team. Some of the best ideas come from
their
the
existing team. Nobody ever asked them.
They weren't asked, or they didn't take the advice, or what, I don't know what reasons there would be. Or they're just like, we're prepping this business for sale. We're not doing anything wild here.
Yeah.
So we get some great ideas from them. And just like to answer your question more directly, businesses that are doing better get more investment than the ones that are not, of course. And we've got a pretty good process about like either the leader of that business or Tom, my VP of product, will make a case that says, hey, if we add a developer to this business, we can knock out, these 10 features a lot faster. These are some that people will pay for. And so we have just like the return on investment conversation.
It's interesting because I think a lot of founders get romantic about vision and features, but you guys, it's like, hey, we're going to spend some dollars because it's got to increase. Mm-hmm. How often do you guys, is that one of the first playbooks is increase price, look at expansion revenue, maybe tweak the value metrics? How do you, what are some of the first things you're going to do to a new asset?
Well, we've got a checklist for just about everything. So we, do SEO checklist, technology checklist, look for like small wins or small things that we can fix that might have a big impact down the road. Yeah. We always look at pricing. We always test paid traffic. We don't like businesses that are reliant on that. We like organic traffic, but
if they've got organic working,
then you can throw some paid on it. And amplify. Most of the founders that we have purchased from, either never tried because they didn't want to spend the money, or they tried and it's really hard.
They were really good at marketing.
Or they didn't want to pay a consultant to do it. And so we at least have the expertise in-house to try it and see if it's something worth reinvesting in.
Yeah.
I mean, there's a list of, Robert Smith has 110
instructions,
standard operating procedure. We're at like 60.
Yeah.
But they're all like some big, some small. We always poll the customer base.
Yeah.
Just as a routine, like once a quarter, every 6 months, like
to help guide product.
How are we doing? Where can we improve on product or service?
What can we do to better meet your needs?
Yeah. What other ideas do you have? Or, tell us something you like. What do you not like? And you get some really interesting insights from customer base too on, guidance of the product or where to invest.
Just asking them.
Just ask. Yeah. Don't be afraid to ask people and be prepared for some tough feedback if, like things are going bad. But like, generally if you ask for, feedback, people, you learn a ton from talking to customers.
How many companies do you think you could manage? Or is it, is there a point where it's better to have bigger companies than so many little ones?
Yes. So we have been slowly growing the check size that we're willing to write. I do think that will probably plateau though, because the space that we're playing in, like you went through some numbers, there aren't a lot of like really professionalized operations playing in that space. There's a lot of, entrepreneurial people who have access to money and they'll
buy some of these
buy a business, but there aren't a lot of people building out a portfolio like we are.
Yeah.
You get into bigger checks like the north of 10 million range, you're going to hit a lot more strategic competition, a lot more PE competition. And it's just not a space.
Do you think the assets you buy eventually become those kind of like you buy them, build them up, they buy them from you and they kind of...
Yeah, it's possible, but our strategy is buy and hold.
Buy and hold.
So we're not
okay, so you're all about return on capital.
So we look at it differently where if we have an asset that's making this great money, I would not want to be a seller in that space. So I have kind of two numbers tied to each business. The sort of buy it now, crazy price. If somebody offers us that or above, yes, deal. Or if something is just underperforming and we think, okay, if we just shed the asset, recoup some cash and move on, we've got a price for each business there. And so this is a quarterly decision that the team and I make, about the whole portfolio. What's the trajectory? What do we want out of this? Should the buy it now price go up and things like that?
It's funny because I think, Kevin, you've done this so much that it's just like kind of like it's what you do, right? But like to somebody else, buying a company sounds like such a foreign freaking concept because they're, like what, I don't know where the bodies are buried, blah, blah, blah. Who taught you this stuff?
I learned it was a foreign concept to me, and I freaked out about the first purchase. I had to learn what escrow was.
And you're talking SureSwift, or did you learn it before?
No, I did. I technically, in my old corporate life, I was involved in an acquisition of a smaller company into my division.
Okay.
So I saw kind of how, but that was a way bigger thing. There was, investment bankers involved on both sides.
Yeah.
And we had an army of like
lawyers,
accountants and lawyers. Yeah. Like I was the business person.
Yeah, you were going to run it after the fact, but they were making sure that.
Right. So I didn't really that process is so different than what we're talking about.
Yeah.
So I learned on the job. I just became a student of my craft, which is acquiring and operating businesses. Mm-hmm. But yeah, early days, I freaked out about it, and I made some mistakes. There were times where I trusted people a little bit too much. There were times where I, overestimated our ability to operate a business when we didn't really have the right team or add value beyond the fact.
Yeah.
So yeah, it's a learning process. Like if I sound or feel like pretty zen about it now, it's because I've made so many mistakes that I've learned from, and now I have a team of people that are generally smarter than me and know what to do. Yeah. And so I'm like trying to narrow my focus to just hire smart people and get out of the way and manage the culture of SureSwift. Those are my jobs.
That's it. Yeah. And like the VP of tech, because I'm assuming that each one of these things are built in different programming languages. Mm-hmm. He helps guidance on, hey, maybe we should upgrade this framework. But like, is that person like a programmer in PHP and Ruby and
he is a programmer. Languages I couldn't tell you. He still digs in and writes code every once in a while because he thinks it's fun. Coach, but he has a team of people,
and each one of the contractors or the teams at the acquiring assets. Yeah. Like they kind of end up reporting to him on the tech side.
Yeah, we have kind of a matrix organization. So I don't know if I said that. Whenever we acquire a business, we bring on the team. The plan is usually for the founders to go do something else that they want to after 6 months, but we always hire the team. Bootstrappers are great at having amazing teams, I have learned, because they don't let anybody that's not pulling their weight stick around.
Yeah.
So we've had so little unplanned turnover with team. It's shocking because they're uncertain. Like, the founder may or may not have told them that they're selling the business, but even if they do, it's a transition, and they're like, "What's the SureSwift group all about?"
Do you have like a comp structure to help retain them, or what's the?
Usually, we say, "Keep doing the same job you're doing at the same comp."
Pay you at what you're paying.
Yeah,
we're gonna, profit sharing. No,
whatever deal you had with the founders, we're going to give you that same deal, and you get the opportunity to work at a much larger company with much bigger opportunity.
Okay.
So, for example, we bought a business where one of the developers lived in Brazil, and he was working half-time because the founder felt like that was all he needed, right? Because he was still writing code and things like that. And we learned he's super talented. So right away we said, would you like to work full-time?
Full-time, yeah.
And by the way, here's all these other businesses that we have. He's a Ruby developer. So we're like, hey, could you want to lean in on this business and do some work here? And now he is the team lead for all Ruby stuff. So any business in the portfolio that has anything to do with Ruby, he
helps manage that.
He helps manage the team and manage the code and manage the strategy and things like that.
That's so cool.
Yeah. And you kind of touched on it, but I should say that the acquisitions have gotten easier and better because it's now a team sport. Like everybody plays a role in, like Jim will look at the code, look at the tech, talk to the developers and understand more about that. And he gives a thumbs up or thumbs down. And if he gives a thumbs down, it's over. Like it doesn't matter how
it's
good.
It's a veto. So everybody can veto a deal.
That's right.
So thumbs down, and this is for everybody, like anybody involved in due diligence or whatever. Do you guys look at support tickets? What else?
Yeah. We look at the support desk. We look at it like a customer. Like we'll often sign up for a free trial and just see how the software works. What's the experience of signing up with their onboarding process and their team? We look at all the finances and things like that. Kind of study competitors and see what they're doing and how does the potential acquisition stack up in that case.
That's so cool. Yeah. And I mean, Robert Smith, for sure, he's like he's incredible. I mean, one of the first, African-American billionaires or one of the wealthiest guys in the US. Mm-hmm. But who else do you study? What other people do you feel has some really smart thinking around this?
One guy that I've gotten to be fairly good friends with is named Brent Beshore. He runs a business called Adventures, and we have a lot in common, just personally how we see the world, but business wise, he has a much bigger business than I do with fewer portfolio companies.
Okay, so he's a buy and hold as well,
but he's in the offline space. So he has a pool building company in Arizona. Like he does nothing with software.
Okay.
Yeah. So he and I can like swap ideas all day long about like how to structure the team. How do you look for acquisitions? And he's also, probably 5 years ahead of where I'm at. He's been doing this for longer than me. Yeah. And he's just a wonderful human being. It's a giver of his time and his advice. But because we're not like competing for the same deals, I can be an open book with him about, what am I? There are other people that are acquiring software businesses. Yeah. And those conversations always, there's kind of a
weird.
little bit of a dance.
Friction there.
Yeah. Not friction, but like people just don't want to be as open and sharing about what they're doing.
Yeah.
So yeah, Brent does a lot of things right in terms, and like software people could learn from him in terms of the way he does lead gen, and he's, just gives out information to the world that, draws people to him. A lot of the, typical tricks of business that we know today, he's been doing for a long time.
How many SaaS companies do you think there are out there that are in this sweet spot for you?
It's a good question. I wish I knew. And you asked earlier. You asked earlier, how many do I think we can operate?
Yeah.
And I never answered that question. I don't put an upper limit on it because I've seen us go from 0 to 34 in 4 years. And there were times where like the wheels got a little wobbly because we acquired too many too fast, or I hired too slow, or I made, bad hiring decisions. But we got through it and we're in a really good place. And our most recent acquisitions have been our smoothest. Like we're getting really good at this. So, and it's sort of a linear thing, you need to add sort of leadership levels to make sure that each business gets the right attention. But, I think we could scale very large, but it does become more about quality, not quantity. But if we want to stay in this range, like I told you, I think is our sweet spot.
Yeah.
Then it is about numbers and just doing it right over time. And I forgot, you asked another question. I jumped back to this. I can't remember what it was.
How big do you think? How many of these companies do you think there are out there?
Yes. I think it is uncountable and growing extremely fast.
It's crazy as we're at Business of Software, and like, you see all these like niche SaaS products, right? Like, what's some of the most
these
niche?
Are the people that have been doing it for
the ones.
10 years or more. That's some of them.
Yeah.
But now on the other end of it, every time I walk into a coffee shop and I see a young woman with a laptop open, I assume she's starting a software company.
Yeah.
Right? Because that's how easy it is. And so I think we're tip of the iceberg in terms of where this, especially in the bootstrap world, where it's going, because I think more and more people are realizing that's a really, really healthy way to run a business and to run your life.
The subscription model.
No VC funding.
Yeah.
I'm saying like
bootstrap.
don't bootstrap and get the MRR going, write some software, and there is a very clear public playbook of how to build a company like that in a million niches that you would have never known existed. Yeah. Right. So I don't think the supply is going to be a problem for us. I don't think we'll run out of businesses that, could be acquired. I think we're showing a path for founders who are like really happy with the results. We take care of their business. We take care of them financially. They're successful.
Because they're really, there's not, where else do they go other than a transaction where they're uncertain of what's going to happen with that and their entity, right? Like,
right.
It's a tough one.
Yeah. It's kind of a messy market out there in terms of like, who's going to do the right thing with the business and who isn't. And like you said, it's a really uncertain process that there isn't a clear, playbook for a founder who wants to sell a business. One of the things that we're working on as a team is just like, how can we share more of what we know to help people, whether they sell to us or not? Because there's a whole segment of the universe that we won't touch. Anything that's related to Amazon, any e-commerce business.
There's a ton of that stuff.
We're not doing that.
Yeah.
And there's still a seemingly infinite supply of businesses.
B2B SaaS products that are catering to those customers.
Right. But if we can share with people what we have learned, either from successes or mistakes.
What's a neat niche that you guys have bought, like a product Like,
So we acquired a business called Feedback Panda.
Yeah.
And it's software to help English as a second language teachers run their business. So it's B2B, so we're selling to business people, but mostly
ESL.
they're independent contractors helping mostly Chinese children learn to speak English.
And
like
it's for
off
them
hours.
to manage their
schedule,
with their
their
clients?
billing, their invoicing, their workflow, checking
It's like a
the work.
mini ERP. Yeah.
For that niche of English as a second language teachers. And it's an amazing business. 2 co-founders, Danielle and Arvid. Danielle was an English as a second language teacher, struggling with how to run her business. Arvid is a super talented developer.
Perfect.
They're now married. I don't think they were married. They were married at the time, but
Did they meet because...
No, they were together.
They were together.
And
That would
he
just be a
saw her
great
being
story.
frustrated and said, I can fix your problem with software. And they realized they had an amazing product and started selling it to her network of other teachers. Yeah.
Kevin, I always love asking, based on where you were in your corporate life to where you're at today as an, CEO and entrepreneur, SureSwift, like, who did you need to become to be the CEO today and to continue going forward? What shifts in mindsets or beliefs did you have to kind of overcome to become this person today?
That's a really good question. There have been a lot over the last 4 years. Originally, I would say I needed to trust myself a little bit more and be okay with personal risk. There was a period of time in my life where I cared way too much what other people thought of me and the decisions I was making, the work I was doing. I was and I think corporate America's designed that way to, like titles and promotions and how many people report to you and all that stuff. And I cared way too much about that. And I needed to be able to say, I'm doing this thing that all of you corporate America people are going to try to talk me out of because you think it's crazy, and I don't care anymore what you think. And even some of people in my family were like, is this a good idea? And I needed to get to a place where I cared less. You can't not care at all, but I now care less. And it's super healthy. And then as we grew, I had to be a better business person, frankly. Like when you're in a corporate job, you can be great at a few things and suck at other things. And there's like a lot of machinery
in place
to prop you up and like, you hire a person or, whatever. But when it's just you, the things you suck at get exposed really fast. And so
good way to put it.
Then I had to start looking for those things and admitting that I suck at certain things and then hire people who are better at that. And I think the person I need to become now is being even better at trying to make my job small and, get even better at hiring great people and even better at just staying out of the way. This morning, Amy from my team sent me a note over Slack and she's like, yeah, we were in this meeting and we made this decision and it is the opposite decision that I would have made. It's not a huge thing. And normally I would be like, hold on, did you consider these other things? And I think maybe the way I would have done it might have been smarter. But I'm now thinking, okay, well, it's a good decision. Like, let it go. It's not like anything bad is going to happen. It's not like a right or wrong. It's just like preference type of thing.
Yeah, I like to tell my clients that 80% done by somebody else is 100% fucking awesome.
Mm-hmm.
And that's the way I think about it. It's like I got to let those things go.
Yeah.
Because in the grand scheme of things, it is a preference.
Well,
right?
just like I was talking about, like the founders that we love buying from are the ones that have removed themselves from the day-to-day operations and they're ready to turn the business over to somebody else. I think about that in my job, not because I'm ready to sell the business. Like I love what I do and I love what I do and I'm unemployable.
Yeah.
Like now that I have swallowed the pill of founderhood, it's over.
Yeah.
I'm not going back to work for anybody else. But I still want to make my job really small and have most decisions made by other people because that frees me up to do other things that are more long thinking, more strategic, that sort of stuff. So I'm trying to make my job as small as possible.
Buy back time, hire good people. That's awesome. Kevin, I really appreciate you coming on and sharing, man.
Happy to do it. This was fun.
Thanks for watching this episode of Escape Velocity. Be sure to like and subscribe and leave a comment with your biggest insight from our conversation. Be sure to check out the next episode.